success?
Yeah.
Perfect. All right. So our team is here. You just want to introduce the team real quick. So Jeremy Carter is our loan originator that will be working with you guys. Victor Coriano is on here. He's our mortgage closing manager. Myself, my name is Joe Leone. I'm the residential mortgage manager over here at GRB. Mike Polito is our underwriting manager, and Mike Pulver, our director of business development. So I know that one of the goals of this session is to really just kind of give a high level overview of the mortgage process and just how things flow. So we wanted to get some individuals that could speak to different parts of it, that handle different parts of it throughout the process for you guys, and have some experts on the line for you as well. So, each member plays a key role in the process, starting with the mortgage loan originator, that'd be Jeremy. He's working with you guys on the front end, helping you guys get borrowers pre-qualified, helping the buyers, helping to understand what the buyer's goals are, and really where they feel comfortable from a mortgage payment perspective as we're getting ready to put them out with a pre-qualification letter or pre-approval and get them shopping for a home with you guys. Once they come under contract, that file gets handed off to our mortgage processors, and they're really that point of contact for the client and for yourselves during the loan process while we're getting them approved for their mortgage. The processor works pretty closely with the borrower on collecting their documents, getting their loans submitted to underwriting, getting them reviewed by the underwriter and approved, and then working with them to clear any conditions of their loan commitment. Our mortgage underwriters, they're the ones that really do the analysis of the borrower. They're calculating the income based on the tax returns, the pay stubs. They're reviewing the assets, working to determine the credit worthiness of the borrower, making sure that we meet Fannie, Freddie, FHA, whatever that loan program is, the guidelines, and that we're ultimately able to package that loan up for sale to our end investors. This is where we differentiate ourselves a little bit. Our mortgage underwriters, Mike and myself have done a lot of work to work with our underwriters to train them to look at a loan and say, how do we make this deal work? A lot of underwriters, and it's a very hard mentality to shift, have the mentality of, well, we can't do this loan, we're going to say no. And our underwriters look at it and say, hey, you know what? We can't make this loan work this way, but if we do X, Y, and Z, we can get this loan to work and get a transaction that works for the client. Our ultimate goal, we do sell a lot of our loans on the secondary market, whether it be to Fannie Mae, Freddie Mac, or an end investor. Our ultimate goal is how do we package that loan up in a way to be able to sell that loan to our end investor. And sometimes that involves us looking at things a little differently. Maybe we don't need a January bank statement so we can get rid of it and we can use a February and a March bank statement to qualify. Ultimately, how do we package that loan up so that when it gets to our end investor, they're seeing what they need to see that loan complies with Fannie Mae and Freddie Mac guidelines and ultimately purchase the loan from us. And then our closers play an important role because they're at the finish line, right? They're reviewing the title work that comes in. They're working with the attorneys to get that loan scheduled and ultimately to the closing table to close. We work a little differently with our closing disclosures as well, where once that loan is locked, once the borrower's loan is locked, our closing team actually goes in ahead of time and gets those closing disclosures out. A lot of times banks will wait till the end once that loan is in closing, and then it could delay the closing another 3 days because you have to give the 3-day TRID window. We're getting that process out of the way up front so that our closers can, or so that our loan can close as soon as it gets into our closing department. It definitely speeds the process up a little bit for us to make sure that we're ready to go as soon as we can. Then we have our other parties that are external to the bank, our buyer's attorney, the seller's attorney, the closing agent. Sometimes the closing attorney will be different from the buyer's attorney. We find that when the buyer's attorney and the bank attorney are the same, sometimes that helps to make the process a little bit smoother. So we'll tend to work with you guys to determine, what attorneys you guys are using, and then make sure that they're on our panels for us to be able to use them as well for the bank side of work. And there's times too where they'll give a discount to the buyer as well when we use the same company. The title company, this can be it can be the same as the attorney. Some attorneys write their own title, and then other attorneys use an external title company to conduct that title search, do the abstracts and the rundowns, etc. And then the homeowner's insurance agent, right? They're providing us with that insurance. We recently implemented a new process where we're allowing the buyer to pay their insurance at closing. So that helps to speed that process up, because a lot of times that will hold up the process where the buyers have to pay for that insurance ahead of time. Any questions on this slide before I move on to the next one? Nope. So, here's a map, and we have this as actually a marketing tool as well, of our mortgage process. Kind of what we just walked through, right? The originator is going to work with the client, get them pre-qualified. You guys, as the realtors, are going to work with the client to help them find a house. The home buyer is going to pick their team, right? And this is the important step where they're not only choosing the loan officer, they're choosing the realtor, they're choosing their attorney, and really selecting that team that's going to help them through the process. Once they're under contract, they're coming in and they're submitting their formal application for the mortgage for us. Once that application comes in, we have a certain period of time where we have to disclose it, and then we order the appraisal. That appraiser is going to work with the listing agent to get a time scheduled to go out there and complete the appraisal process, and then our loan will come in for initial review with underwriting. And once that initial review is complete, the client will issue a commitment letter. The client will also work on obtaining their insurance at the same time. And so, during this process, this takes anywhere from 15 to 30 days to complete that initial underwriting review. We track those times, and we'll get to that slide eventually. But our typical turn times, we're running about from application to mortgage commitment, initial mortgage commitment, we're running about 8 days. And then from a mortgage commitment to final credit approval, we're running about 22 days. So all in, our process takes about 30 days from when the application comes in to when it gets over to our closing department for them to be able to begin scheduling. A lot of times we're waiting for titles to come in, right? And that's what's holding up our closing. But we're able to get our bank side of things done relatively quickly on our end. And then, after underwriting, after that final credit approval is in, we're working on scheduling the closing. The borrower is doing their final walkthrough with you guys, and then we're getting to the closing table. We do a hybrid closing where basically the buyer signs a majority of their documents electronically the day of closing, so that when they go to the closing table with the attorney, they're not sitting there signing a huge stack of documents. They're signing basically just the notary documents, which is a handful compared to the stack that they would normally sign under a regular process. Excuse me. Any questions here? Great. And here's those turn time slides. So on conventional loans, we're running 9 days from application to commitment, 21 days from commitment to final approval. All in application to closing, we're running 30 days. That's based on 137 loans year to date. For FHA, we don't see as much FHA volume coming in these days. So we only had 8 loans year to date, but we're running 9 days from app to commitment. The commitment to final taking a little bit longer at 24 days, just because there's a little bit more paperwork. Those loans tend to be a little bit hairier than a standard conventional borrower, and then 33 days from application to closing. And that gives you a little bit of insight into what our turn times look like. So we use our GRB Mortgage Express app. Jeremy, you want to talk a little bit about that and how it plays a role in the process?
Yeah, sure. So this is a super helpful tool for myself, and it can be for you guys as well. So what this is this is our GRB app, and with this we do a number of things, right? So it can take a borrower from initial application, like they can start their application here, they set up an account with us, it walks them through filling out all the basic information we would need to really start the pre-qualification process, and it prompts them to upload all the documents that we would need to review to be confident in issuing a pre-approval. So with that, I mean, it allows the borrowers to take pictures of documents and convert them to PDFs and upload them straight and securely to our portal, or our backend software that we have. So if they don't have scanner or access to any of that stuff, it helps with that. It also, has a little mortgage calculator tool that they can kind of run numbers themselves on and with. And also, more importantly, this app can also be co-branded with you guys so that when you share it with a borrower, right, your information shows up, your picture, all your contact info is there as well. So it's constantly reminding them. And anything they do in that app, you can also get notified of as well. And where that really helps is where, maybe you start talking to a borrower, we pre-qualify a borrower who maybe they're not all that serious and they disappear for a couple of weeks. All of a sudden you get a notification, hey, Jeremy just went back into his mobile app and he just ran some numbers on the calculator. Suddenly and you might have cause to kind of reach out and just say, hey, I just wanted to check in, see how it was going. And of course from there, and it's like, oh, funny you should call. I was just looking at this property, right? It helps you stay in front of your borrowers. And it helps us to really kind of manage the process in a more expedited way. And for me, I mean, I say this to everybody, I prefer them to go through this app because then when I sit down with them, I don't have to spend 15 to 20 minutes just basic data gathering. I have the picture. I can already sit down and have an idea of where I think that conversation needs to go in terms of programs. And we can have a much more robust conversation, spending time on things like their budget, their goals, their time frame, and the more important things, and kind of just get the conversation rolling a lot better.
Any questions on the app? Great. So step number 2, credit and qualifying. So this is really where the evaluation of the borrower comes into play. Determining, what type of loan they qualify for, how much they qualify for, help the borrowers understand their process. That's our standard pre-qualification. That's something we can do on the fly. You guys need something on a Saturday because you're writing an offer. Jeremy can do that portion of it. We also do fully underwritten pre-approvals. So if you have a buyer that you want to help strengthen their offer, we do a fully underwritten pre-approval. We have our Cash Plus program as well as our standard pre-approvals, where we're basically getting that buyer clear to close, subject to them finding a house. And that gives a little bit more ability to strengthen the offer. If we're guaranteeing an appraisal when we're writing those offers, we can actually eliminate some of those contingencies because mortgage commitment or mortgage contingency has already been met with that pre-approval. And it shows that those buyers are serious about buying the house. So that's been a very successful program in helping our offer stand out. Jackie actually just chimed in and said, I've used the app firsthand as an agent and borrower and found it to be super effective. So that's great feedback on the app there that was in the chat. But these pre-approvals definitely help to help your buyer stand out and write a stronger offer for the clients. Step 3, the house search. Oh, go past here. So this is that process, right? Trying to find that house, what makes sense for the buyer. This is where they're really working hand in hand with you. I know Jeremy has spent a lot of times doing some buyer consults with you guys as you do find that house, jumping on a Teams call, running through some numbers with the client to make sure they're comfortable with where things are, how high they need to go, with their offer, or how high they can go with their offer. Step 4, hiring the team. Again, choosing those attorneys. If there is an inspection, making sure you're getting that inspector that you want to make sure that you're getting everything, all the angles covered from that perspective. Step 5, the mortgage application. So as we mentioned earlier, right, once that property has been identified, you guys have a contract in hand. We're working to prepare their mortgage application. Once we receive that 6th piece of information, which is the property itself, the address, we have 3 days to issue disclosures to the borrower, gather any information and remaining documents so we can get that loan into underwriting and start to hit those key milestone dates in the process, commitment dates, closing dates, etc. Step number 6, the appraisal. Mike, do you want to talk a little bit, Polito, about the appraisal and the process overall of ordering the appraisals and what role they play?
Yeah, absolutely. So I am Mike Polito. I'm the underwriting manager. So appraisals, they play an important part. You know, basically what we're looking for is, you know, on purchase contracts, you know, we want to make sure that our appraisal is raising to value. You know, one of the big things that we do, you know, behind the scenes is that we are able to, you know, if we're writing an offer and we're just unsure of how high we want to go over our purchase, you know, offer, we're able to do some research to validate and see if comps are going to be supporting that value so that your buyer can really write with confidence, knowing that that appraisal will come in at value. So that's very helpful. Some of the things that we're looking for in the appraisal, you know, we're going to be looking at the comps are going to be, you know, within a mile or so. Anything outside of that, you know, the appraiser is to address and really document why they're using comps outside of a mile. Our appraisal process, the processor orders it, you know, upfront at the time of when they get the loan. We have it integrated within our system. It takes about, I don't know, a day or two before they reach out to the agent to let them know that they're going to be setting up the inspection. You know, we get it back in, it comes directly in our system, goes into underwriting. If it's submitted today from the processor, we will have it on our review list for tomorrow. You know, we organize our files by commitment dates, so we want to make sure we hit those commitment dates. So that's really about it on the appraisal process. There's times where we do run our automated underwriting system, and it will allow us to bypass the appraisal where we can use an automated appraisal waiver. That's always helpful as well. So those are little jackpots, I call them. Borrowers are very happy when they find out that they don't have to pay for an appraisal, and you've got confidence right away on the value.
Yeah, and you know, we use an appraisal management company, but we can set our appraisal panel. So if you guys have appraisers that you prefer to work with or like to work with, you can give Jeremy their names, and we can make sure they're part of our panel. We can't guarantee the appraisal is going to go to that appraiser every time, but our panel typically consists of 4 to 5 appraisers. So, and it gets round robin throughout that panel. So if there's particular appraisers that you guys prefer, let us know, and we can make sure they're added to our panel, and so that they're getting a share of that business.
Particularly on appraisals like FHA appraisals, if you've got a buyer, you know, who is just the house could have some issues that you foresee being a problem, you know, getting ahead of it up front, you know, reaching out to Jeremy and saying, hey, you know, do you think this will be an issue? You know, typically what we see on the FHA loans, VA loans, peeling paint, those types of things we can do holdbacks for, you know, and just do the repair when the weather allows. But getting ahead of it up front, and sometimes even offering, you know, on an FHA offer, you know, you want to have the buyer say, we'll cover up to a certain amount of money on repairs. That's always helpful as well. But any questions on anything, you know, reach out to Jeremy, and he's great at finding things up front and bringing them to my attention into underwriting to get ahead of them so that there's no problems down the road.
Yeah, and we have a sheet we can provide you guys as well, particularly on the FHA stuff, of the common repairs that get called out, because as Mike said, it is helpful to know what your if you are writing an FHA offer, to help it stand out, know what those repairs could potentially be, and help your buyer understand, like, hey, this downspout on the hot water tank is going to cost, you know, $3 at Home Depot, so we can easily pop that in there and get it done. Versus, you know, the exterior home that needs to be scraped and painted is going to be obviously a little bit more costly. But we found that that helps on listings as well. If you're preparing for a listing, so that you can be prepared as to, okay, if an FHA offer does come in and it's the best offer on the table, what types of repairs may be needed to make that happen.
Yeah, Joe had mentioned earlier too, you know, regarding our underwriting style. I mean, we underwrite the guidelines, so if there's a question, you know, usually FHA loans and appraisals have stigmas with them. You know, just getting ahead of it up front is the biggest thing, having us take a look at anything that's questionable. You know, we're gonna go off of what the guidelines state, and we know how to make loans saleable, and we've done several FHA loans, VA loans, USDA loans, things that just require more scrutiny on the appraisal. We're pretty good at you know, navigating, making that work.
Did somebody have a question or comment?
I had a super quick question. This is Rich Santos. along the lines of that automated or that desktop appraisal, what triggers that, or what allows that to happen? We are in a relatively rural area, so in my mind I'm seeing like cookie cutter suburb where like house 16 is the same as house 17 is the house 18. Is that what triggers that, or how does that work?
So Fannie Freddie, they have proprietary system that they use based upon comps that have sold recently that are Fannie Freddie. If they find them within their system, when the appraisal gets scored through the UCDP, if it is confident enough in the value based upon recent sales, it will issue it. Now it's LTV based. Condos aren't eligible. There's criteria of certain things that are not eligible for the appraisal waiver. Usually a lower LTV, and like you said, in a suburban area where there's a lot of activity, you're more likely to get a waiver. But we are able to really identify that upfront. Once we have the address, we can run it and find out exactly after we get the address and send the contract. But it's a crapshoot. There really isn't a exact science. So.
Yeah, a lot of it is, to Mike's point, a lot of it is data driven. What data Fannie and Freddie have around that subject property? Did it transfer recently and the new owner took out a Fannie Mae mortgage, et cetera? So that's a lot of times what we see is the more recent loans, we're seeing more of those where the data is there. Victor, we're at the title process here. So when reviewing a title for mortgage purchase, so you want to talk a little bit about title and what we're looking for and what are some of the gotchas that typically hold us up?
Absolutely. Good afternoon, everyone. Thank you for the opportunity to chat with you. My name is Victor Coriano, and I am the closing and post-closing manager at GRB. With regards to title work, some of the issues that we kind of work through and what we're reviewing, especially with some of the older transactions, is ownership and chain of title being first one. We're verifying that the seller has the legal right to transfer ownership. It's kind of one of those, they should, but we really need to confirm that they can definitely do that. Liens and encumbrances, checking for unpaid mortgages, tax liens, judgments, and other claims that must be cleared before closing. This definitely comes up very frequently if the customers refinance during the refinance boom, and they forgot to discharge something. It might still be outstanding, so that might delay the actual clear title for a day or two. Easements and restrictions, we are looking to identify any easements, covenants, or zoning restrictions that may impact property use or value. The legal description and boundaries, what we're looking at is ensuring that the property's legal description matches the loan documentation and that there are no other disputes over property lines. And finally, title insurance, just requiring a lender's title insurance policy to protect against potential title defects or claims that are going to be possibly coming out in the future.
Yeah, and that title insurance, I always like to share this example because I've heard it, many times. Oh, you don't need owner's title insurance. And, we had a situation at the bank here where we had a mortgage on a property. The owner of the property sold the property. The attorneys, when they sold the property, the owner signed an affidavit stating they had no mortgages on the property, even though there was one recorded, and the attorneys missed it. The new owners of the property, once we found out we never got paid off when that property transferred, we actually had to start foreclosure proceedings so that the owner's title insurance would kick in and pay off our existing lien on the property because it was never cleared correctly. So that's a great example of like, oh, it actually somebody used title insurance, and it was great that those owners had it, because had they not, it would have just created a mess. So I know title insurance is one of those things where it can be an extra cost, particularly to the buyer, but it is important and does play a key role in that process. So just a little insight there. And then if you are representing a seller that is an entity, an LLC, something like that, something we're typically having to go back for is seller signing authority. So a lot of times, if we have a purchase contract that's signed by somebody that's the owner of an LLC, we actually need proof that they have the authority to sign on that behalf. So just something, if you do have a listing where you are representing an entity in a transaction, if you can get that stuff up front, it'll save you some chasing down after the fact, and some delays in the process, because it's usually something we have to go after and ask for several times to go back and get.
That's Joe, is that the same for estates, executors of estates, power of attorney, all those similar sort of variances
Yes,
on ownership?
absolutely. Anytime you have somebody signing that it's not Jim Smith signing for Jim Smith, that we're going to need some type of documentation to prove that they have the ability to sell for the property. So it's just helpful to collect that stuff up front, so you're not having to go back to your sellers after the fact. Now, Victor talked about the abstract and the title insurance. Homeowners insurance is one of those things. Mike, you want to talk a little bit about the homeowners insurance requirements and what we typically look for?
Yes. So homeowners insurance, there's a lot of misconceptions sometimes. I get a lot of questions, regarding coverage amount, things of that nature. You know, basically what the borrower needs to cover is they need to have enough coverage to cover the loan amount, or the policy would need to have actually like a full replacement cost designation on the policy. So one of the things we're looking for is coverage. The mortgagee clause has to list GRB as a loss payee in the event of any damage. We would be the ones to our thing would be paid off first. The effective date, coverage date must be active before closing. Deductible limits typically don't really have any issues there. Usually you see them about $2,500 or so. And I'm sure no one's doing any lending in Florida, but we lend in Florida, and I'll tell you, the premiums are way different out there, especially with the wind hazard policy. So that really could sink a deal with such a higher insurance policy. So we don't have that problem up here, but proof of insurance typically, in the form of just a binder declarations page must be provided before closing. So, and as Victor, Joe had mentioned, we're collecting these premiums now at closing. So we're not really having to worry about the buyer pay these until actually they get the closing.
And, one thing we've seen recently, and probably a lot more recently than in the past, is, buyers who have existing, or sellers, I should say, who have existing claims. So a lot of the insurance is property specific. So if the seller had a claim recently, that buyer could have excellent credit, but yet their insurance costs are so much higher because they're looking at the property itself. So it does impact the actual insurance, regardless of if it was you that made that claim or the previous owner. There is the insurance companies have record of that. So we've seen where, somebody's struggling to get a cheaper policy because the previous claims that were on that property, and, the age of the property can play a role into that as well.
Joe brings up a good point. We've had borrowers where, let's say they take out new debt unexpectedly, and, we're facing debt to income ratio problems. And first thing we're looking at, how do we get the DTI down? We'll look at the payment, right? Are the taxes correct? What's the homeowner's insurance payment, right? Well, we look at it, well, they've got a $1,500 premium on a, $200,000 house. That seems kind of crazy. So we have a lot of contacts, a lot of agents that we can reach out to and shop around premiums fairly quickly and get really good rates. So we have our go-to. So if anyone's in a pinch, we do have that ability to really shop around and over when you need.
Any questions on insurance?
Who would spearhead that shopping around? Would that be the initial contact, the loan officer, or would that be a different avenue?
Yeah, typically it would be the loan officer that would guide that. They have some of their own contacts that they'll reach out to, some of their go-tos, and and even if the client just needs a referral for insurance, if you guys don't have somebody that you use, the loan officer could refer somebody as well.
It's amazing the amount of money that I see is wasted on insurance premiums. I just can't believe some of the premiums that are being charged for, $200,000 houses.
Yeah, I will say too, like, I mean, I think part of this is just what's going on in New York State, but I do feel like the premiums are rising in general also, because I've seen several policies come back that not specific to any one company either, but just were significantly higher than like the estimates we used to give. And it just seems that, yeah, in New York State, I think there's several things that have happened with like Adirondack kind of folding and leaving that has left a lot of people in the lurch. And now, yeah, insurance rates are kind of going up a little bit. So we'll see.
All right, our commitment letter. So the commitment letter is that initial approval that we give out to clients. So once they've gone through underwriting, we're issuing that commitment letter. There's times because our process is a little bit quicker where that initial commitment letter that comes out, the appraisal's not in yet, so it will still be subject to the appraisal. And then once the appraisal comes in, it goes back to our underwriting department and they actually clear that appraisal condition and we reissue a commitment letter that's not subject to the appraisal anymore so that we can free up that mortgage contingency. We also issue commitment, I mentioned earlier, our pre-approvals. So on a pre-approval, we'll issue that commitment letter subject to them finding a house with the majority of all the conditions cleared because we've already pre-underwritten them and basically gotten them clear to close. So that also we found is sending that in with that offer sometimes helps strengthen that as well. So once the loan package comes in, Mike, you want to talk a little bit about underwriting and their final credit approval that we're issuing?
Yeah, absolutely. But once the loan comes into underwriting, typically, Jeremy submitted a loan, today to underwriting. It would go on our queue tomorrow to be underwritten. Our goal, our SLA is usually 1 to 2 days. We will have that commitment letter issued with all the conditions on it. If it was already a cash plus or pre-approval, the only other conditions that would be on there would be, just the title, the appraisal, and homeowners insurance. So most of our commitment letters are usually pretty clean. We don't have underwriters that are just adding stacks of conditions just to add conditions. So we encourage our team, our processing team and our loan officers to, use prudent judgment to push back if there seems to be any over conditioning. So we definitely, we do not want that. And we want our commitment letters to just have on there what is exactly needed. And we don't do the comfort conditions as other lenders do. We are very good at our guidelines and we know what to ask for and what not to ask for. So once that comes in for initial review, our underwriters are looking at, credit, income, assets, things like that. And if everything looks good, we'll go ahead and issue our commitment letter. Once all the conditions kind of start to trickle back in, then we'll come back on our queue to review for condition reviews and or appraisal review. So once that appraisal is reviewed and cleared, technically that's when the commitment is satisfied for the contract. And everything that we do is organized by close date, commitment date. We like to be well ahead of where our dates are. We operate on a first in, first out basis. So we're not, waiting on things to be looked at that aren't due until 10th. We'll clear a loan today with a commitment date due of April 10th. Right. So we're just getting them out, as soon as we can. So once the appraisal and all the conditions are cleared out, processor will send it back into underwriting for a final approval. We'll look at everything, make sure the numbers jive, and we'll issue out our approval. And then it goes into closing. Closing does their thing, and I'll let Victor speak to that. That's on his next part of the slide.
Victor?
So it's the top of the ninth, and I'm sure that you can hear Metallica, Enter the Sandman. The closer is coming into the game. So we are at the finish line or nearing the finish line. So that means that the closers are coming in. Before the closing appointment, what we do as far as closing is just coordinating with everyone, making sure that everyone is on the same page as far as expectations, if there's any urgencies, if we need to close this week, can we close next week, are there vacation plans, and just really just putting all the schedules together. And then once we do that, just making sure that all the terms and the final conditions have all been satisfied, making sure that there are no surprises. Everybody knows where they stand, the loan amount, the payments, everyone is on the same page. The things that my team is looking at is going to be the purchase agreement, just confirming that all the terms, contingencies are met, who's paying commissions, making sure that that's documented accordingly. That's an important one for you. Loan documentation, reviewing the mortgage terms, interest rate, and repayment obligations. Again, we don't want somebody to show up at a closing table expecting a payment of X and then getting something reflecting Y. Title and title insurance, ensuring clear ownership and addressing any title issues. No surprises. The important one, closing disclosure, explaining the final costs, loan terms, and payment details. There are especially first-time home buyers. They have more questions, usually around escrow. So we take the time to explain all those details so that way they understand exactly what the escrow account is and what they're actually bringing to the closing table and why they're bringing that. We touch base on homeowners insurance and taxes, again, verifying required coverage and the escrow details. And then the final walkthrough, just addressing any last minute property concerns and financial adjustments. Once that is set, we give the thumbs up, we get the green light, we get the documents out, and like Joe was saying, we do have a hybrid process. So what happens on the actual closing date is our borrowers would get a notification on that GRB portal that Jeremy touched base on, and the borrowers can sign documents as early as 8 o'clock in the morning. They will be able to sign half of the closing package on their mobile device, whether it's your computer, iPhone, iPad, and then they'll follow the appointment to whatever the designated date and time and location is going to be for the documents that require wet signatures and notaries. One question that came up is, who is typically in attendance? As far as the most common folks that are attending, it's usually the buyer's attorney, seller's attorney, and then the bank attorney. So everybody that's got an interest in the sale, the purchase, is going to be located in that room. And sellers sometimes show up, they sometimes don't. And usually, for the most part, I would say 90% of the time, they get the documents signed ahead of time, so they actually are not at the closing table. And then the loan officer, they sometimes will be at the closing table if they have a great relationship with the client, or if the client's got any urgent needs, if they have any concerns. Usually, our loan officers will coordinate with them and be at that table. And then the other important thing is, as far as the bank attorney, they work closely with my team to, again, just make sure that everyone is on the same page as far as scheduling and the closing date, times, and locations. The one big important thing is just making sure that all the paperwork is completed, all the I's are dotted, all the T's are crossed, and then that package is sent back to GRB so that way we can go ahead and do the post-closing piece of the loan.
And the one thing with our bank attorneys are all clients of the bank. So the morning of closing, we're actually transferring the funds for those closings into their accounts. So there's no waiting for a wire to come through or anything like that. That money's ready and available for them, the morning of closing, so that they're able to just proceed as they need to with the closing and distribute the funds accordingly.
I don't think new agents know how important that is, how long I used to sit waiting for funding approval for some banks. So that's amazing.
Yeah, I mean, it definitely makes it a lot easier and a lot smoother just to put that money in there in the morning and closing. And if for some reason the closing doesn't happen, we just pull it right back out. And, we're not waiting around for those funding approvals to come through. Any additional questions? We have some other loan types and stuff that we do, FHA, VA, USDA loan types and restrictions. Anything you guys want to know about that, we'd be happy to discuss those. Manufactured homes, we do lending on manufactured homes. Typically they, as long as the buyer on lease, but if they own the land and there's a manufactured home on there, the biggest challenge we find is for those built after title work and getting title work in place.
Can you guys hear Joe? He's like cutting out.
You want me to hear him? I can hear whoever said that, Jeremy. I can hear you now. I can't hear Joe well.
Yeah, Joe, whatever. Something just happened to your volume a little bit in that last 25 seconds.
How about now? We good?
There you go. That's better.
All right. Yeah, I don't know. After a while, my microphone cuts out on this computer. I don't know why. So I don't know what you guys heard, or where it cut out.
Manufactured homes. That's where we lost it.
Okay. So yeah, so I know what was mentioned on manufactured homes. We definitely lend on manufactured homes. They have to own the land. We don't do it on leased land. Jeremy, and I know you've run into some issues with title work on manufactured homes, particularly out in that area.
Yeah.
You know, if the homes are built after 1996, we need the DMV title. And that's usually the gotcha that we run into is, you know, did the DMV title transfer correctly previously? And, you know, can we find it? Or can we get a replacement title if need be?
There's
And that's
there's a question. Oh, sorry. There's a question in the chat too about Ashley had asked, like some buyers use Rocket or Zillow for the pre-approval process. Like, what are some talking points as to why they might prefer to work with GRB and or a more traditional bank? I mean, we see this a lot. As we had, I think maybe saw on slide 2 or 3, where it said the initial pre-qualification process is informal. I guess the nicer way of saying that is there are no real like I don't know, laws that govern like how a pre-qualification is done. And at a lot of these bigger shops, I feel like they might pull credit, but a lot of the pre-quals they're issuing are just based on a verbal conversation they have had with the borrower and nothing more. It's a numbers game, right? They throw a bunch of them out and hope something sticks. So I think the best talking point you can have is to make sure that those borrowers are working with a local lender who's going to do the due diligence on the front end to actually request documentation, ask the questions about their income, their job history, so that they can issue a pre-qualification letter or a pre-approval that they are confident in that they can back and fulfill. Because that's the biggest thing we see is that, you know, buyers get these pre-qualifications from Rocket Mortgage. They go through the process for 2 or 3 weeks and then suddenly they get a decline letter saying they don't qualify because of something on their credit, right? Like that's the first thing we do is pull a credit report. There's no reason a borrower should be 2 or 3 weeks into the process and then be told they don't qualify because of something on their credit. So that's, I think, the biggest talking point is just making sure that the pre-qualification is from somebody that you trust and has done, you know, the work on the front end and, you know, issue something you can be confident in.
one of the things we found with Rocket as well, and you know, one of the important things we see with just being a local bank is, you know, do you have your loan officer's cell phone number? A lot of times, Rocket loan officers, Zillow loan officers, they're in a call center. So you're getting whoever answers the phone every time you call back. You don't have that one dedicated person. Whereas with Jeremy, you know, they have his cell phone number. You know, you guys can call us as the bank and talk to a manager here and get answers and things done that would be a lot more difficult. So as you're talking to clients about that, excuse me, it's important for them to understand like that importance of having a local bank where you can actually call the loan officer at 9 o'clock on a Friday night if you need to on a cell phone, versus having to call into a call center to try and get an answer or talk to whoever you might pick up the phone.
Yeah, and to add a little more color to that too, Ashley, you know, what Joe was saying, you know, there's times where, you know, buyers aren't the best sometimes at getting their documents together in a timely fashion. So our pre-approval, our Cash Plus program, is a fully underwritten program where the buyers can make offers, you know, commitment letter in hand, fully underwritten. There's no surprises. So there's times where buyers just drag their feet for a week or two, then they find the property they want to write on. The next thing you know, you've got an agent reaching out to Jeremy at 8 o'clock on a Tuesday night, say, hey, I need this by 10 a.m. You know, Jeremy's going to do everything he can. He gets it in, he brings it in, he submits it to underwriting. We have a very great process, a rush process that I wanted to mention in my when I was talking about underwriting, that anything that comes in that is requested a rush, we make it high priority, especially with our Cash Plus, initial commitment, final approval, a CD, closing, anything that comes through as a rush, we really put up in the forefront. So if someone reached out to Jeremy and said, hey, you know, we want to write on this at 10 o'clock tomorrow morning, here are our documents, you know, and it's the night prior at 9 o'clock, well, we're going to do everything in our power to get that done, where I don't know as if, you know, at a bigger national lender was really going to put in that effort to provide an approval in such short notice. So we have that leverage, we have that power, and we do everything that we can to make that happen. And, you know, we're all here locally in Rochester. Jeremy's in my office, you know, a few times a week asking questions. Agents reach out to him. He could come right to me directly. My door is always open. You know, and they're hard questions, right? I mean, they're questions that, you know, the agents aren't comfortable with, or borrowers that aren't comfortable with. You know, scenarios that come up that you know, need to be vetted out ahead of time. Where I don't think you can get that type of service from a bigger you know, national lender. I think that's what's really going to set us apart from from a more traditional bank or something like Rocket.
Um,
The only thing that I was going to add to that is I think one of the key ingredients is relationship in this business. We understand the importance of the relationship from you to Jeremy, whether there's an insurance company involved, whether there's a bank attorney involved, and we understand all the dynamics that come with that. We are going to do everything that we can to make you shine because at the end of the day, it's you and your reputation that's on the line. And we are going to do anything and everything that we can. I can't tell you how many times we've actually had to rescue someone that was working with a client who went to Rocket or Zillow, and then we had to come in during the ninth inning to save the day. And we were able to do so, and we were happy to do so, and there were lessons learned. So hopefully, we can avoid that lesson in your situations and, definitely hit a home run every single time for you.
Yeah,
Yeah.
thanks. A little more color to that. I don't know if I'm taking the words out of Joe's mouth, but other lenders, bigger banks, we have other options. We have our portfolio options. We offer HELOCs. We have investors that will take non-QM loans. I mean, we just have a whole array of variety of products where if something doesn't fit conventionally, we're going to maneuver it to every possible way. We don't like to decline loans here. We want to make loans work. So, as Victor said, we do everything in our power to make deals work, and that's why we're here.
Yeah, just to kind of throw in like a quick 30-second example too. I've actually have like something I'm working on with one of your guys' agents there, where they were pre-qualified by, it wasn't Rocket, but another larger bank. They're self-employed borrowers, and the bank never once even asked to see tax returns, and their business the last 2 years show a loss. There's literally $0 of income they have to use conventionally. And the agent had used the pre-qualification, and the borrowers were under contract for like a $400,000 home with absolutely no income to show for it. So fortunately, because of those non-QM products and our portfolio programs, like there's going to be something that we can do to help them. But again, it kind of speaks to the fact of just make sure that you're sending your borrowers, or making sure they're getting a second opinion through somebody that you trust and is going to actually ask the right questions and do the right due diligence.
And I think, what all these guys hit on, right, is if you do have a buyer that started with a different bank and that deal's starting to go sideways, before you kill the deal, call us. Let us see if we can do something to save that deal. I can't tell you, we probably get 4 to 5 calls a month of, hey, this loan started with this bank. They're having issues with the appraisal. Conventional mortgages typically shouldn't require repairs. But we see a lot of times where we get deals from other banks because the appraiser or the bank is calling for repairs that aren't necessary. And so we're able to just have an appraisal done ourselves and proceed with that loan as normal without having to do those repairs and set those buyers and sellers back. So those little things, our ability to do portfolio, the non-QM products, and what non-QM products are, they're alternative ways to calculate income. So the example Jeremy's talking about where the tax returns don't show income, we were actually able to use his business bank statements for the last 12 months and just take the deposits from those bank statements and use that to calculate his income. And we see that a lot with self-employed borrowers, right? They write things off so that they can reduce their tax burden. And so qualifying for a mortgage isn't always the easiest, but having those alternate methods to be able to calculate income helps in those instances. So if you do have a deal that starts to go sideways, by all means, give us a call. Let us take a look at it before you kill the deal and walk away from it. We have on here, land loans. We do some land loans. We do a 75% loan to value for buyers that are looking to acquire land. On those land loans, typically if there's a barn or a structure on the property, it'll count into the overall value, but there's not a lot of value is given to it. But it has to be particularly just a land loan. There can't be a house on there for that land loan. There's another question in the chat here. Seeing lenders getting into short-term rental markets. Lenders are all private equity types. They lend based on the Airbnb income potential using data from AirDNA and other data scrapers. Have you heard of this? Is this a market segment you would loan on? So we do what's called a DSCR loan, or a debt service coverage ratio loan, where we're qualifying solely on the rental income of the subject property itself. We see that a lot with investors. Airbnb can be used in those instances, but it's a little bit more difficult if there's not a history on the property. So we're having to take alternative methods to get that Airbnb documentation. But we use just the rental income. We look for at minimum a 75% DSCR ratio, meaning that the rent is at least 75% of the mortgage payment. So if the mortgage payment was $1,000, we'd have to have rents of at least $750, and those borrowers can qualify for those DSCR loans. And so, they work well in most instances. If it's like a lakefront property that gets a lot of seasonal, weekly rents that are bigger, those can be a little bit more difficult to qualify. But each scenario is unique in that sense. So that debt service coverage ratio has been very popular for us as of recently with the investors themselves. And the terms are pretty competitive, right? You're talking about a 30-year fixed mortgage today at 7.5% on an investment property with a point, whereas your alternative would be hard money, which is 10 to 12% with 2 to 4 points, right? So and the borrowers can hold title in the LLC, and they're business purpose loans. So they're only able to do them on investment properties, but we have seen a lot of positive momentum with those types of loans recently.
Just to piggyback on that, Joe, another thing that we've been seeing a lot of too are bridge loans. So we have the ability to do our own HELOCs in-house, and there's been several deals that we've saved by offering a HELOC. So for example, if a buyer, looking to sell their departure residence and needs money from that to put down to really stand out on their offer, for utilizing their equity, to put towards their purchase to win that offer. And we'll allow a bridge loan on our HELOCs, even though we know that they're going to be selling the property. The only thing with that is if the HELOC is closed within the first couple of years, they're subject to recapture of the closing costs, which are very minimal, $1,000-$1,500. But we see a lot of buyers winning now that they have a little bit more horsepower in their down payment and their to offer up a higher EMD upfront and get what they want. So just keep that in mind too. If you got buyers that are just don't have the money, but they own a home and they're trying to sell their house and they just they want to use the money and they're in a pinch, we do offer that as well. So reach out to Jeremy and he'll guide you on that one.
So just these last couple questions we have on here. Personal property. As much as we can keep personal property out of the purchase contract, that's fantastic. Typically, we can allow for normal stuff, washer, dryer, stove, etc. If you have boats, furniture, anything like that that's transferring, we ask that you just keep that on a separate addendum and not include it in the actual purchase contract, because there comes a point where we have to value those items and then reduce the appraised value by the valuation of those personal property items. So the more we can keep those out of the purchase contracts, the better. And usually what we see is a side contract with those items in there. And then contract addendum, if you have any price changes or anything like that, anything changing on your contract, we will accept just an addendum to the contract. We don't need a whole new contract in those instances. The addendum is fine. That is the end of our slideshow. But just to see what other questions maybe we didn't answer, anything you guys want to know more about, any programs, products, etc. that we can talk about.
I'll chip in with, so those last few that last sheet of questions were mostly my questions. So thank you for placating me. I'm the one with I'm the inquisitive one of the group. But to go back to the app for a second, because I haven't ever looked at that or used that. Now, is that something that as an agent we would want to have or use, or that's really just a buyer client portal to make the loan officer's job easier and faster and more functional? I think I missed the part about maybe the co-branding and maybe that little bit of how we could track the progress. Jeremy, could you fill me in a little bit on that? And then the second one is more overarching. I think the biggest take home that I want our agents to understand is, to you, the lender, what is the perfect real estate agent, right? How involved do you want us to be? How active, how inactive? How do you want us pushing the agenda or the time frame, or do you want to drive the train? Like, I always feel like in our area, our biggest struggle is that things just bog down because no one does anything. And I don't know if that's on the agent. I don't know if that's on the attorneys. I don't know if that's on the lender. No one knows. And it's sort of like, well, someone's going to do something at some point. So I just, it's a general question. What is the ideal agent like attentiveness level for you guys?
Sure. Yeah. So I think they're both great questions. To the app part of side or the app part of that first. And Joe, you can kind of jump in and correct me if I'm wrong, because I obviously don't see the agent side of it as much. But I mean, I think there's definite value in you having it as well. Like I said, it can be co-branded. It can show your information. That way, if you're out talking to somebody and you say, hey, you know what, you sound like you want to get pre-approved, you sound like you're taking the right steps. Here, I'm going to send you the link. Like you can send the borrower that app and a link to start the process right from your phone or right from the app yourself. When they complete that app, it comes into me, and I believe it notifies you of like any steps they're taking along the way. So it'll let you know that they've completed the app. Once we're in process, I believe it's letting you know like what milestones we have closed and like where they're at in the process, as well as like anytime they are taking actions in the app. I mean, you can set how many notifications you want to be getting from this, because it can be overwhelming. And to be honest, we've turned a lot of them off because it can blow up your inbox with just notifications of borrowers taking actions in there. But it helps you to have oversight on the process and where the borrower is as they're going through the pipeline. But also it's super easy to get borrowers connected to us, that way.
Jeremy mentioned earlier too. I mean, one benefit we see from the app a lot is if you share your app with a client, Jeremy talks to them, we get them pre-qualified. They kind of go to the sidelines because they didn't find the house right away. And 6 months later, they go to run numbers. You're going to get a pop-up notification that says, hey, James Smith just ran numbers on this house. And now you can stalkishly call them and be like, hey, I'm just checking in with you, knowing that they were in the app running numbers. But it gives you that insight into the buyer activity. And as loan officers, as real estate, we're so focused on what's in front of us at the moment that those buyers we talked to 3, 4, 5 months ago, right, kind of sometimes fall by the wayside because we have 100 people that we've talked to since then, and we're trying to work with the clients that are engaged and ready to go. So it's a good way to keep some tabs on your buyers as well.
Yeah. And then I think to your second question, which is, what does the ideal agent look like? I do think that's definitely a two-way street, right? Like, what is the ideal loan officer also? Because, our team is very good at, knowing our turn times, knowing our commitment dates, making sure we are hitting those. So if we see that a file hasn't been, actually, I think Joe could speak to this. Like, isn't there, like, our processors have to touch the files like X number of times, right? A week.
Yep.
Or so somebody's always looking at these files and making sure things are progressing. And if they are not, we know to reach out or to, get in touch with the proper party to say what's going on, what's missing, what do we have to do here. So, you guys being more proactive about that, or not being afraid to ask questions like, hey, I haven't seen anything happen in a couple of days. Where are we at? Don't be afraid to do that. But I think also our motto is that you shouldn't be having to do that if we're doing our jobs correctly. You know what I mean? So yeah, I mean, being proactive and anything we can do to keep things moving and not just waiting and assuming somebody else is going to do it, I think would be the ideal agent. But
yeah, and one thing we find too is how you guys refer us really sets up the success, right? If you just tell the client, hey, here's Jeremy's number, give him a call, Jeremy's never going to hear from that client, right? A lot of times it's going to be, you're going to reach out to Jeremy. Hey, Jeremy, did you hear from John Smith? No, I haven't heard from him. But if you refer it and say, hey, John, I'd like to have Jeremy Carter give you a call. Can I pass your information along to him? And then you're giving Jeremy his number and having Jeremy call. We find that to be a lot more successful because it keeps it within our control. And we're not waiting for that client to call. Same thing if you're sharing that app and saying, hey, I'm going to share the app with you, but I'm also going to have Jeremy give you a call to answer any questions you have and start that process with you. We find that helps set us up for the success versus just, hey, just call Jeremy when you have time. Because what usually we find in those instances is the buyer, now you've shown them 3 houses, they're ready to write on a house and they haven't even talked to Jeremy yet. And so that process of that referral and how you guys hand us off and that warm introduction versus just hey, just give Jeremy a call and he'll help you from here. That definitely helps set up the success of the transaction. And
I think like I have the most success with just like a 3-way text, like throw everybody on the same chain and just say, hey, Jeremy, meet so-and-so, so-and-so, meet Jeremy. And that way they've already talked to you. They've developed trust with you. They're a lot more what's what I'm looking for? They're a lot more responsive in that text chain when they know like you're watching now, and like I can respond, and it's a much warmer transfer, and things get going a little bit quicker if it's a warm introduction like that. Yeah.
And we've developed what we call our mortgage playbook, and our mentality is if you're calling us for status, it's too late.
Yep.
We try to stay ahead of you guys, and to Jeremy's point, right? Our processors are monitored with that. They're going in and, once that loan is approved, they're sending out a weekly status email. You guys are copied in on that email as well. So you can see if it's been 3 weeks and we've been asking the borrower for their pay stub or their bank statements, we're going to probably reach out to you. Hey, this guy's not really cooperating with us. Can you give him a buzz or give him a nudge? But ideally, we want to be able to control that process and not have to have you guys worry about, hey, what's going on with my loan? We're keeping you in that communication flow as things are moving, so that you're able to see what's going on in real time, versus wondering and then calling Jeremy on a Friday night trying to find out what's going on with the loan and he can't get you an answer yet. Like, we're trying to stay ahead of that and make sure that you guys are informed every step of the way.
So you mentioned something before about an FHA checklist.
Yep.
What other types of resources like that do you have? Like, I've seen like a mortgage do's and don'ts for your buyers. Like, please don't go buy a car, while you're in underwriting.
Right.
Or a
So
boat.
you guys, what other like lists or kind of resources do you have that the agents can kind of keep with them and they know, like a quick reference?
Yeah, absolutely. So we have a system that we use. It's our CRM. It's called Total Expert. And you guys can actually sign up as co-marketing partners with us in there. And within there, we have a library of different flyers, different forms, different social media posts that you can use. But to your point, we have the do's and don'ts. We have the FHA checklist. We have simple stuff about grants and what programs are out there that clients can take advantage of. And we can definitely share some of that stuff with you guys so you can see it. With the co-marketing, once you're signed up, it asks you to go through a little process of inputting your information, uploading a headshot, a photo, etc. But once you're in there, we can generate co-marketing flyers that we can share out with you. We can do open house fact sheets right through there as well. And we can even create some journeys. The nice part too is if you guys want to use that as your own CRM, you can use it to track some of your leads, and any leads that we share with each other, they'll be in there as well for you guys to see. And so we can schedule a whole different call to go through that and do some training on that with you guys as well.
Yeah,
that could be a whole nother
that would be great.
hour-long conversation on that thing.
Yeah, that would be great. And the open house thing too, like that's something we did more downstate, but more of the agents up here are starting to pick that up and do that. So marketing before that event, for sure, maybe a mail or a flyer, something that could be co-branded. But would you also, I know Jeremy's busy, because the answer has always been, just call Jeremy. That's what I took away from this call. Just call
That's what I'm here
Jeremy.
for. Just call.
Right.
I love it. It's great. But do you do any open house? Would you do an event, something like that with an agent? I know, like, not every weekend, but is that
Yeah,
enough?
of course. Yes, absolutely.
And we
Just call
we
Jeremy.
co-host brokers opens as well if you were going to have a brokers open ahead of, just to have the opinions come in from the brokers. If it's a nice property that you want to showcase, something like that, we could help you guys with the brokers open as well.
Yeah, that's awesome.
Any other questions you guys have for us?
I think that was pretty comprehensive. I think you got everything, and that's pretty much an hour. So that's
Yeah.
that's great. Yeah, that's a
5
great
minutes
job.
all
Thank
over.
you.
We might have already covered this, but like where could we get this slideshow or these slides?
Yeah, so
The,
we'll have the recording, which we'll share out with you guys, and then we'll also share the slideshow out with you as well. So we'll email
Okay,
that over
perfect.
so you guys have it.
Great.
Can you guys send me the recording to put on our YouTube as well, or are you guys just going to blast out a link? You're going to host it somewhere.
You know what? It's through Teams, so I got to figure out how to do that. If I
Okay.
can send it to you, I will definitely send it to you.
Yeah, if you can
I'm
get
sure we
us
could
the
download it and drop it
actual-
in like a Google link or something. To
Yeah,
share.
if you
They
can download it, and we'll upload it to our YouTube this way, because we have our class playlist. I have OCD. It's all going to be in one spot.
Perfect.
Yeah,
Cool.
we can figure that out.
Yeah, this was great, everyone. We appreciate your time and the effort that went into this. It was I think for me personally, I can say that it answered a lot of my questions, so I truly appreciate it.
Yeah, and any topics like this you guys want us to jump on, if things come up and you're like, hey, we want to learn more about this product or this process or whatever it might be, just let us know. We're happy to jump on and do these regularly.
Yeah,
Yeah, I
think
mean,
it'd
the
be great.
branding is, I definitely want to schedule the co-branding because lead gen is always the Achilles heel of the agent. It's not, you know, like you said, once the buyer or, you know, the sale basically gets the contract, gets to the lender, you guys, it's almost the easy button for us. But getting that client committed to us in the process is, you know, where we could use some help. So that would be a great class.
Yep.
Absolutely.
Turn them into a
Cool.
series.
Absolutely.
All right. Well, thank you guys for joining and taking the time
Thank
on
you. Yeah, thank
on
you
a
so much for your
Wednesday
time
evening.
tonight.
Of course.